Mitch Reiner, Managing Partner, Capital Investment Advisors. Thanks for joining today. I'm also a member of the Money Matters team. So I'm here to answer a question from one of my clients and wanted everybody to share in the love of the answer. I recently had a client ask me, what is the most tax-advantaged way to give back to my community? There's a couple of ways to think about this, and it really depends. It depends on your situation this year. Is it normal or is it abnormal? And so for all of us, as we consider our situation, 2020 is obviously abnormal to us. But from a normal standpoint, I'm talking about income. Is this a year where you and your spouse earn the right amount of income or the same amount of income that you usually do? Or is this an abnormal year? So I'm going to first tackle normal. Normal, if it's a normal income year, you're within percentage points of what you average on a regular basis. There's really three good ways to think about contributing to your community organization, right? One would be appreciated stock. So as investors, sometimes we end up with stock that we bought at a low price and end up appreciating so much where it's at a very high price. And if your appreciated stock is experiencing an overweight position in your portfolio, meaning it represents such a large percentage of the overall mix of your assets, then this may make sense for you to under allocate some and do so in a very tax efficient way, because when you donate that highly appreciated stock, you don't have to pay the capital gains that you would have to pay otherwise. So if you already decided, I have too much of this asset in my portfolio, I'd like to underweight this a little bit, this may be an effective way of doing that. The second reason why you would think about appreciated stock is if you believe that that stock is overvalued. It's too expensive. It's run up too much. I like that stock when it was trading at 5 times earnings, and now it's trading at 50, right? It's too expensive. So that may be another reason to be able to take some chips off the table without having to incur the tax liability. Another way to think about giving back to your community in a tax advantage way is if you are a retiree and you are required to take minimum distributions out of your IRA on an annualized basis, you can give directly from your IRA to the organization that you want to benefit. And you don't have to pay any income tax on that distribution out of your account. So as opposed to taking your required minimum distribution, depositing in your bank account, then writing the check to the organization, it is more tax beneficial to make a direct contribution from your IRA than it is taking a receipt and then writing a check for cash. The third way is just writing a check for cash. It's not nearly as tax advantaged, but you do get a tax deduction, what we call below the line, meaning you get your income and then you deduct your expenses and things like charitable contributions. But it is better if you can donate appreciated stock because it's overvalued or overweight, or if you're retired and you're taking required minimum distributions and giving it directly from your IRA to the institution. An abnormal situation would be if you had a large income event. Did you get a huge bonus this year that you were not expecting or is very unusual for you? Did you sell a business? We create a large capital gain event. Did you create another large capital gain from either selling a home or a large stock sale? So in these situations where you have an abnormal year from an income standpoint, you may want to consider what's called a donor advised fund. And you may want to consider making a larger donation this year than you typically would. So for example, if you wanted to benefit an organization with $1,000 every single year for the next 5 years, but this year you were pushed into a higher income tax bracket, so you may consider donating $5,000 in this 1 year to get the benefit in this year. And then you have the option and opportunity to dole out $1,000 a year for the next 5 years. So if it's an abnormal year, you may want to take advantage of a bigger donation in this current year. But if it's a normal year, I prefer the 3 ways of appreciated stock directly from your IRA and an RMD or just cash. So with that, if you have any questions regarding this topic or any other ones, we're available to you as the Money Matters team at yourwealth.com. Have a great day.